All right, time for today's three-stock lunch. We're going to take a closer look at three movers. First up is Ulta. The stock gained about 12% earlier in the session after the beauty products retailer reported third-quarter earnings that beat analysts' expectations. But that stock is year-to-date up about 1%, basically flat. Here with the trades, Boris Schlossberg, BK Asset Management, also a CNBC contributor. Your thoughts on Ulta, which sort of next to NVIDIA gets as much talk as any stock on CNBC, it seems.
Yeah. Well, because it's a great company, very, very unique retail product in the sense that it acts as a supermarket for beauty products, which is very attractive to female consumers. But it also has a salon business, so it really intensifies that relationship with the consumer. And then it has a great online to store business, so it really creates that habitual sales. So it's very hard to beat that model. Clearly, I think a long-term growth model. The main risk to this business, in my opinion, is actually macro, not micro. It's basically a question of whether the labor markets remain buoyant and the female consumer continues to have more disposable income, and that should really help its growth. I think overall, 3 to 5 years down the road, this is going to be a very, very strong winner, even if it has a little bit of turbulence.
So Boris says buy. What say you, Saran?
So I think one of the things, Boris, to watch for there, we've owned this stock in the past, is when things slow down, the beta of Ulta is much larger than the market. And given kind of we're going into Christmas and the consumer slowing down, I mean, you're right. If employment stays where it is and wages don't come down, I think it'll be a great stock. But I would be a little scared here just going, because you've already got the run. You've got some short covering in here. I think the opportunity is when it kind of pulls back.
All right, let's move along.
No, I agree.
Go ahead. Go ahead, Boris.
Sorry, I was going to say I agree. You got to basically stomach the turns in the stock. But long term, it's going to be a great buy.
Well, let's see if you guys agree about Paramount. Those shares are on the rise on reports that's talking to Apple about bundling streaming services. The stock's up 9%. Boris, you like it?
No. Paramount has been a disaster from every angle you can look at it. Cable business is dying because the only thing people are willing to pay for on live is sports and news. They don't have that. Its direct-to-consumer business is a bleep because they're not even a second best. They're basically an afterthought for most people as far as the product goes. But it's not a short. It's not a short because it has a very storied asset library, and clearly it's worth more than its parts, or the parts are worth more than the whole. It's just a question of whether the management is going to be willing to give up control. There is, if a white knight comes in, it's definitely going to be worth quite a lot more money than it's trading for now. So if you're a punter, yeah, it could be a great, could be a great trade. It's definitely, I think, not as an investment at this point.
I completely agree with you. I think this is tradable at this point. What's going to happen, in our view, very similar to what Boris is saying, is basically going to get consolidation. And at what price you're going to get consolidation, because you're not paying for eyeballs like you were 2 years ago, right? It was back then, it was, hey, streaming, Disney was doing this, Peacock was doing this. It's actually negative value, even with the parent company of Comcast. I mean, Peacock's losing billions of dollars, every year. So I do think you either get a strategic investor in here that can kind of it could be an Apple, it could be a Disney, it could be, somebody there. It could be combining with a Peacock. Who know, and then you kind of spin these off. But it's all about cash flows, and the market's not. It's great cash flows, but you're not getting any value because the question is, it is a depleting asset over time. Because it doesn't have live entertainment. It doesn't have something like.
Go ahead, Boris. I see you nodding.
I totally agree with that. Everything he's saying is absolutely correct. I think it's great as part of something. It's terrible as a standalone business right now.
Very interesting. All right, let's talk Bitcoin, shall we? 39,000 as the latest inflationary commentary leads to more bets that rate hikes are over. Boris, your take on Bitcoin, the asset that the late Charlie Munger loved to hate.
The asset never quits. Does cat have 9 lives? Does Bitcoin have three acts in its story? I mean, I think if you look at the history, yes, every wave down has been followed by a wave up. Although last wave has seen so much wealth destruction that I think the appetite on retail is really muted at this point. Ironically enough, I think there's 2 reasons why Bitcoin is going to do well, and one of them is very ironic. It's when it becomes de-digitized. It's if Bitcoin becomes securitized as a Bitcoin ETF that's very fungible, that's very easy to trade for a regular retail investor, then I think it's actually going to get a lot of flow, and that would be very, very supportive. The second reason is really sovereign debt. It's basically a bet on the fact that we're going to have some sovereign debt problems. If we see failed 30-year auctions, if the T-bill auctions actually have higher yields when the Fed cuts rates, which is a sign of risk premium that the investors are willing to pay, that's when I think you're going to see Bitcoin really start to take off. You're already starting to see gold take off. That's what these are all bets against sovereign debt, basically, in my opinion. So yeah, definitely a possibility. The fact that it's been very quiet rally right now is probably very technically positive. So that's my view.
So I think we're going to agree on this one too. I think Bitcoin is like the new gold, but I'm more of a firm believer in crypto and blockchain. So I think that's how I would rather play, to find companies that are using blockchain or crypto and not just one of the coins. Like
just not the asset.
Yeah, not the asset.
Not an asset
it's actually
play,
the technology, the blockchain behind it, which I think is going to be here to stay. But I do think Boris is right in terms of a Bitcoin and a gold. It's a hedge in your portfolio. It's what if those rates. I mean, at that point, we're not going to have S&P 5,000.
Yeah.
So you're going to have other things going on in your portfolio. So it's a diversification.
Interesting.
That makes the everything rally today extra.
That was more fun than your normal three-stock lunch, because we had you guys both talking back.
Let's do it again.
Let's do it again. Absolutely, Boris. Thank you. Have a great weekend, sir.